Yo, what's up traders? Welcome back to the channel. In this video, I'm sharing you guys a coaching session that I did with my Discord group yesterday, but I'm going to post it on YouTube for you guys. We are showing you guys exactly how to trade price action. So if you guys are excited, hit that like button and subscribe. Let's get into the video. Okay, so basically what I want to go over with this session is actually nothing to do with Elite Algo. This is more something to do with price action, because it is very important that you understand price action in order to use Elite Algo to its fullest ability. So we're not going to be talking about Elite Algo today. We're only going to be talking about price action. So how to trade based off the price that's happening on the chart. Okay. This will work for any type of market. So crypto, stocks, Forex, if you're trading gold or indices, futures, it doesn't matter. Okay. It will work for pretty much everything. The first thing we need to understand how to do is we need to understand how to look at a chart and draw trend lines. What are trend lines? Trend lines, very simply, guys, it's just up here. If you go into the toolbar, click this little icon, it's going to show you trend line. This is basically just a line that either moves upwards or downwards. Okay, so very, very simple. Now, how do you use these trend lines to actually give you ideas of when to trade? This is very simple. Okay, what you want to look for on the chart is you want to look to try and connect at least two lows of a chart together, and that will form a proper trend line. So for example, right here, we can see that this trend line right here is connecting this low, and it's also connecting this low and this low, right? We can see the price came down and touched this trend line. So what happens now is we have a valid trend line that we can use as support and resistance for our trades. Okay, so this is how I want you guys to look at it. Okay, before drawing a trend line, you need to make sure that there's at least 2 points that can be used on that trend line. So for example, right here, we got 1 point, and this is 2 points. Now, what happens now that we have 2 points available on the trend line is now it validates this trend line. So now this trend line is valid. If there isn't 2 points on this trend line is no longer valid. Okay, this is very important for you guys to understand. Okay, now the importance of it being like super close to the candle doesn't really matter. We're really looking at it more as a general area. So think of it as like a little bit of an area above and below this little trend line. Okay, so if we were to draw like two of them, for example, it would be like, sorry, it'd be like an area around this big right here. Okay, I want you guys just to remember this, that it's not a for sure line. It's more of an area. Okay, but this line will help us understand what's happening on the chart very, very easily. Now, as we can see right here, we had these two touches, 1, 2. So now what do we want to do if we see these two touches? So if we were to go back to here to the replay, for example, and this is what we see right now. So we see 1 touch, 2 touch, and we see that, okay, if we go up, we saw that the price has come down and it's retracing, right? So it could be a start of a new uptrend because it did not create a lower low, right? So this low is lower than this low. So the price did not create a lower low, which means that an uptrend can be starting. Now, this is what we want to look for. We want to look for the price to come back down into this trend line and then show us signs that it's going to go back up based on the candle themselves. Okay, so this is what we're going to do. So we're going to press play real quick. We're going to see it comes down. This touches the trend line right here. And then look what we see here. We see this massive doji candle. This candle right here is called a doji candle. I want you guys to remember this. When a candle looks like this is called a doji candle. Now, whenever you see a candle that looks like this means that there is indecision in the market, right? So it's a fight between buyers and sellers. And right now, no one is winning when you see this type of candle. So they're all fighting each other. So what we want to do next is we simply just want to wait and see if we can get a big green candle right after it, or at least 2 big green candles right after it. Boom. So now we see we have a big green candle right after the doji, right? You see that? This big engulfing candle that was just printed. This is a sign that right now there is more buyers in the market than there is sellers. So now what you can do is now you can take your trade, right? So we would have taken the trade right right at this big engulfing candle, and we would have used a take profit and stop loss like this. So we can see over here that we have our trend line, right? We see over here that we have a pretty good support building up, right? This is an area of structure. Look how many times the price has touched this area before not being able to break it, right? This is very, very important. So now we know that the price is going to start going up. So what do we do here? Now we just got to set our take profit and our stop loss, okay? And obviously this is price action trading. This is going to be a little bit more complicated if you're a beginner trader. But you can also use Elite Algo to give you buy and sell signals alongside this type of strategy to really, really have a high win rate, okay? So then we set our take profit and stop loss. So we can do our first take profit at a 1-to-1 ratio. And then the second take profit, we can do a 2-to-1 ratio. So something like that, for example. Okay. So as soon as the first take profit gets hit, we can take our stop loss and put it to break even. And that way we made some money and we don't lose any more money on trade, but we still have potential to make even more. And then what happens with this trade? Obviously, price goes up, hits our first take profit, right? Because we have a lot of momentum in the market, and comes back down, touches our trend line. And then look what happens here. We get another one of these. You see these right here? We got another, let's delete this. We got another doji candle, right? Followed by a big green candle, 2 big green candles even. So that's even a bigger confirmation that the price is going to start to go up. So this right here could have been another trade around this area, right? So our stop loss, again, we see that we have support right here, right? The price failed to break this line multiple times, right? Came down once, twice, 3, 4, 5, 6, 7, 8. Was not able to break the support. And then what we do, we can take another trade. We can target whatever we want. We can even target even higher, 1.5. I normally do 1.5 just as in between 1 and 2, just to kind of make it easy for me for what I want to target. But as you see, price couldn't go up, and eventually price gets hit because we are riding the momentum of the market. So we are trading off that trend line, and we are trading off support resistance, which in turn is price action trading when we are looking at the candles. Now, a cool thing about different types of candles, for example, like Heikin Ashi, that you can do. Now, unfortunately, I cannot do replay with Heikin Ashi, but that's okay. A cool thing with the Heikin Ashi candles is that you can basically follow these candles when they turn green. That kind of gives you an indication that, okay, there's momentum, right? And then if it turns red, you can be like, okay, momentum's losing here. So that's what the Heikin Ashi candles are for. They're for helping you see momentum a lot sooner if you're a beginner trader versus using Japanese candles like we have right here. Now, another thing that can happen if you have a very valid trend line like we have right here, right? So we have a valid trend line over here. We could have taken another big trade right here. So our trade right here would have looked like this. We have the small doji candle right here. I'm not sure if you guys can see it. Let me zoom in real quick. See how we have a small indecision candle right here? This is called, again, another doji candle. And we have a big engulfing candle. This means that we have momentum again. This would have been another trade. Our stop loss would have been slightly below here. Our take profit around 1.5 times. Again, you can see the price came up, hit our take profit. That would have been a winning trade. And the reason why we have a stop loss here, again, is because we have a very strong support around this area. You see that, guys? The price had a hard time breaking this area multiple times. So we're using this little area as a support for our stop loss. Okay. Now, eventually what happens is the price breaks out of this. Now, what happens in price action trading is that whenever a very strong trend line is broken, it's always going to go back up and retest that trend line. Around like 75 to 80% of the time, the price is going to come back up and hit that trend line again. And then we can get another idea of what can happen here. So for example, we see price eventually broke out of this trend line, right? And then what happens? Price starts to create newer lows, right? So over here, this now is a lower low versus this low, right? So now we're looking like we're in a downtrend, right? So what do we want to do? We simply just want to wait until the price goes back up, hits our trend line that we had earlier, and then we can see, okay, do we want to start trading this? Let's react to the chart and see exactly what's happening, okay? We know that a new trend has started because we're getting a lower low here. We see it touched our trend line up there, and we see we got a very big red candle right here. So then we can do this. We can enter a trade now to the downside. So our stop loss would be up here, because now we have a very strong resistance up here. Right, see this low resistance. It couldn't break past this low area. So now we have our stop loss going that way, and then we could take another trade going this way. And that's pretty much how you guys can see what price action trading is. It's trading off these little trend lines, and when they go back and retest them as well when that trend line breaks. It's very, very simple concept when it comes to price action trading. Now, if you guys have any questions, this is the best time to start asking, because I can start answering these questions. Anybody have any questions? How to figure out false breakouts. So basically what you want to do is you don't want to trade as soon as the trend line is broken. You want to wait for a retest. And then again, you want to wait to see if you have a big red engulfing candle or a green engulfing candle on that retest before taking the trade. So I'm not trading over here when it's like, so for example, I see over here that it broke past this trend line, right? I'm not trading this. This is not enough confirmation for me. I'm going to wait for it to retest up here, and then I'm going to take the trade. Okay, this is very simple concept that you guys can follow. Also, another thing that you guys can do for these is you can use trend line breaks as ideas of when you want to take out. Again, I would not enter unless I see a big engulfing candle. So I'm looking for a big red engulfing candle or a big green engulfing candle. If there's no strong market move, then you don't want to be trading on the 5-minute time frame. Trading is about patience and about waiting for the perfect opportunity. And then once you see that perfect opportunity, you can take a trade. If you have a ranging market, you don't want to be trading at all. This is very important. So another tip I also like using before you guys leave here is over here, for example, we know that it broke past this little this trend line right here. We start creating a lower low. I can simply draw a trend line like this, and then I can wait for this trend line to be broken to validate the new downturn trend. And as you can see, it broke it, came back up, touched the trend line again here. So it validated my trend line again before coming back down and giving us a big red engulfing candle right here, even two big red engulfing candles. And then the price would have went down. It would have caught that as well. You can use any time frame you want. Just know that the price action itself will follow the higher time frames a lot better than the lower time frames, right? Because the lower time frames are more easily manipulated by money with big moves from banks and institutions and hedge funds. So it's a lot harder for them to manipulate the market on the 4-hour time frame versus it is to manipulate the market on the 5-minute time frame. So that's why I personally like trading higher time frames. It just makes it so I have a higher win rate because it's less influenced by banks and hedge funds and manipulation. As again, I hope you guys liked that video. If you guys learned something in that video, please like and subscribe. It really helps us grow our channel and motivates us to keep making video content just like this so you guys can learn trading the proper way. Other than that, guys, thanks for watching. Have yourselves a good day.